Hello, everybody. I hope everyone is having a great afternoon. Today, I do want to talk about the markets. The markets reflect and affect cryptocurrency, stocks, and real estate, as well as your personal wealth, all in the same. So this video is for anybody that's investing or not investing and just living your regular life. I used to make these videos a while ago, but nobody used to watch them. And all of a sudden, I made a video yesterday and I actually got good views. So I'm going to give you the general market outlook, both within our borders and outside our borders, the micro, the macro economics of the world. Today closes the third consecutive quarter, 9 straight months of negative declines in the stock market. Things are going from, hey, it ain't so bad, to it's bad, to very bad, and teeter-tottering on absolutely freaking terrible. Problem is, everything that's happening right now is not exclusive to one specific region. You're either doing bad, extremely bad, or absolutely freaking terrible. But nobody is really doing good, are they? Yesterday, I reported that the inflation in Germany hit a record peak of 10.9%. That is up from 8.8% the month before. The issue is this is affecting the Eurozone, and the Eurozone came out with their inflation, and guess what? It is also 10% even, and that is up from 9.1% last month. The United Kingdoms did not get their inflation numbers for September, but if you go by August, their inflation is at 9.9%. Nearly 10%. And as we know, the United States inflation is at 8.3%. All eyes are on the CPI data, which is going to be coming up next month. I, of course, will be filming it live on this channel. What happened? The market was doing so well in the morning, and all of a sudden, the market turned for the worst. The crypto market, the stock market, and the real estate market, well, it doesn't turn day by day, but you guys all know what's happening with the real estate market, which I will get into in just a moment. The bonds, the treasury bonds. So treasury bonds, you have 2-year and you have 10-year. Now, I'm not the most in-depth, knowledgeable person when it comes to bonds, but I think I'll break it down very simple. 2-year bonds gives you a short-term outlook of where the economy is going to be in terms of inflation, while a 10-year bond gives you a long-term outlook of where inflation is going to be. Now, the treasury bonds in the United States for 10-year hit over 4% at one point, and they ended up settling at 3.7%. This is nearly a record from 2010. This is the highest bonds we're getting in over 10 years. If you look at the UK bonds, the UK bonds hit 4.5% for the 10-year, and it ended up settling on 4.05%. That means that the economic outlook for 10 years ahead in the United States, we think that we're going to have 3.6% inflation, 3.7% inflation, while the UK believes that they're going to have just a smidge over 4%. This does not look good. And if you look at the 2-year bonds, the United States is at 4.264 and the UK bonds are at 4.29. Both of them believe that we're going to have just over 4% inflation in the next 2 years. And both of them believe we're going to have around 4% and just lower in 10 years. Because the interest rates keep going up for the bonds, this forced the stock market to take an absolute shit and give up any gains that it was making. Why? As interest rates on bonds are going up, the outlook is bad. And also, guys, I want to give you today's sponsor. It's M1 Finance, as well as Webull. I have a link to M1 down below, and I have a link to Webull down below. Webull is giving a fantastic promotion where they're giving up to 12 stocks for free, and M1 Finance is going to give you a nice present if you open up an account. You get something and I get something. Free is free, especially in today's economy. And if you do need an account, why not use M1 or Webull down below? With that said, let's get back to our regularly scheduled program. Why would you invest in stocks that are so volatile when you could just invest in a bond that's going to give you guaranteed returns, which is then extracting any liquidity, removing any money that would be going into the stock market and now allocating it to the bond market. For the last half a decade or so, the bond market was shit. Nobody invested in bonds. You practically got no money. So where do you invest? You invest into the stock market. Also, this is synonymous with the crypto market. If you don't like the stock market, people invest in the crypto market. The point is, as crypto is going down, as stocks are going down, as both are super volatile, people are like, yo, F this. I could just get my guaranteed returns for the next 2 years and collect my 3.6%, my 3.7%. Or I'll just call it quits and invest in a bond for the next 10 years and not worry about anything whatsoever. Now, this might not be the way you're thinking, but this is what's affecting the stock market and why you saw the sudden drop in equities, why you saw the sudden drop in cryptocurrency. Let's talk a little bit about the Federal Reserve. The Federal Reserve is going to meet 2 more times this year. They raised the federal funds rate by 75 basis points. Currently, we have 3 to 3.25. They're estimating that by the end of this year, we will have 4.4%, which means that there's going to be another 100 basis points or approximately 1% rate hike between now and the end of the year. So we have 2 more meetings. This can be 75 and 25. This can be 50 and 50. Or this can be 75 and 75. And we ended up getting 150 basis points instead of 100 basis points. This 4.4% has been revised several times over and is actually 1% higher than it was around half a year ago. Guys, nothing in the economy is looking good. Not micro, not macro. Micro short term, macro long term. If you go into the real estate market, the current stated mortgages is over 6%. This is as bad as it was since 2008. And the actual mortgage, if you actually try to get a mortgage right now, it's not 6%. You're going to be paying between 7 to 7.5%. It's really, really bad, which means purchasing power is diminished. Home sales are already going down. Home sales, I believe, last time I checked, were around that 4.5 million mark. We were having around 5.5 million mark. That means that less and less people are buying homes. Why? You're not qualifying for a mortgage. Your mortgage payments cannot be more than 28% of your monthly salary, of your gross income. So as your mortgage payments go up, you can't afford it, which means eventually home prices will go down. The reason why home sales right now are decreasing is because people are choosing not to sell their homes. The seller has prices from a year ago, while the buyer is worried about prices in a year from now. The best thing you can do right now is sit tight. Try not to spend. Save your money. Get rid of all debt. And I practice what I preach. It was a very, very, very hard pill to swallow, but I had to pay off over $100,000 in margin, in leverage, and I'm so glad that I did that. Your mind is going to tell you, no, don't do that because stocks are already so low and they must rebound. However, there is definitely a lot of room to go down. Because of the geopolitical uncertainty in Europe, shit is about to hit the fan. Also, we have famine. The worst famine or international food crisis that we have since 2008. We have 345 million people, 345 million people in danger of starving. This is a global catastrophe. Not to mention, everybody is very, very scared of nuclear tactical warfare. What does that mean? If Putin sees that he cannot win this war, he might shoot a tactical nuclear weapon into Ukraine. What does that mean? A small range nuclear weapon, small radius, relatively small radius. It still is going to demolish an entire freaking city, but it's not going to demolish your whole country. And if he does that, what does the United States do? And what does the Eurozone do? What does NATO do? Nobody knows. And we're going to have a little game of chicken right here. Guys, this is not going to get any better at all. And like I said, probably until the end of 2023, early 2024, this is not going to be getting better. It's probably going to be getting worse. Now, are there going to be rallies in the stock market? Absolutely. Are there going to be rallies in the crypto market? Absolutely. Will those rallies last? I have no idea. That's up to you to say as an investor. I could just give you the numbers and the facts around us. And the fact is, nothing around us is looking good. Everyone thought and was hopeful, including myself, that we would start climbing out of this. But it seems that we're digging a deeper hole. Because remember, the United States is tied with the global market. The United States is tied with the global economy and the global circumstances. And unfortunately, even if it gets better here, it's still getting worse abroad. The problem is, as it escalates and gets bad abroad, it's going to get worse in the United States. And the United States is the best option in a worst case scenario. The jobs market came out very strong. What does that mean? Very low unemployment. The Federal Reserve wants unemployment. The Federal Reserve wants people to lose their job, so they have no money, so they spend less money in the economy. Until that happens, the Federal Reserve is going to keep cranking out the interest rates. The problem is, as they're raising the interest rates, this is going to increase our global debt payments. Currently, our global debt is nearly $31 trillion. For every percent that we raise the interest rates, when we renew our short-term debt or increase our debt, we have to pay 1% on $31 trillion is nearly $310 billion. At our current federal funds rate, we're paying nearly $1 trillion in interest payments. Not to mention, we had 2 negative quarters of GDP growth. This quarter is being estimated at 0.02 growth. Yesterday, the Atlanta Fed, I was on their website, it said 0.3, but I was reading a report from the Federal Reserve that says 0.2, which means it's quite possible that we're going to have a third negative GDP, because remember, these are estimated numbers. And if we have a third negative GDP, we're just one more quarter away from a depression. And if we have a depression, you better believe Europe has a depression, and you better believe UK has a depression. Guys, be safe out there. Be careful. Crime is also on a rise. Stay safe. Make sure that you have funds on the side. Try not to spend more than you can afford to pay outright. However, a lot of people are going to make a shit ton of money in stocks, in crypto, and in real estate. And just because most of the market is going down does not mean there can't be certain winners in each market segment. For example, a certain particular stock, for me, Palantir, I believe is going to do really, really good, while the rest of the stock market is going to go down. Cryptocurrency, I believe certain cryptocurrencies are going to be doing good in the market as the rest of cryptocurrency goes down. And same thing with real estate. Certain areas in real estate are going to go down less than other areas. Some areas are actually going to appreciate instead of depreciate in value. And the person that has cash to buy properties is going to be freaking king and make a killing. Maybe not next year, maybe not in 2 years, but I have a feeling in the next 5 to 10 years, a lot of things are going to change after this craziness. A lot of economists are saying that it's going to be a sideways market for the next many years, 2, 3, 4, 5, 6, 7, 8, 9, 10, a decade years. Eventually the market will come back. Hopefully we don't have to wait 10 years, and hopefully we're able to make really good picks where we're actually making money in a really shitty situation. Thank you so much. Please give me the likes. Please give me the shares. Please give me the subscribe. Have a fantastic weekend.